last time you were on, you said something that really resounded, got lots of emails. It would be nice to be virtuous in a vacuum, but I don't think we have that luxury. And I really love that quote, but it also has a dark side. Is it a starting gun for a new round, a bigger round of market manipulation by central banks?
Well, in a way, I guess we're in a position of having to fight fire with fire, Rick, because it's been a comfortable position for Fed officials to just say we're pursuing our domestic economic objectives. But you can't put on blinders with regard to what other major central banks around the world are doing. And it's one thing to say our statutory mandate says we should achieve full employment and stable prices. It turns out there's a third pillar that comes out of the Federal Reserve Act of 1977, and it's that the Fed should be acting to promote moderate long-term interest rates. And I think that goes to the heart of the inverted yield curve that we're now confronting.
You know, the dynamic of what's going on in interest rates, especially longer maturities, is that we have $17 trillion of negative securities. And just this year alone, we've gone from only 20 billion negative corporates to over $1 trillion. So you think the answer is to create more of that? Because that's exactly what will happen if we take that course of action.
Well, I think that is such a prominent symptom of what happens when you decide not to go with market signals and the price mechanism, but to empower a small group of officials to establish the interest rate. Because this perverse situation of negative yielding debt has been engineered by central banks. And I think one could argue that it's not stimulus per se. I don't think it stimulates economic activity, at least productive activity. I don't even think that it raises the inflation rate, which is what central banks purportedly are trying to do. It really has its strongest impact on shifting currencies. So that's what's happening with these differential interest rate policies among central banks.
Now, if the U.S. central bank holds the line and doesn't get involved in this kind of Al Capone sort of situation where they're providing something that really isn't on the up and up because it's deemed necessary or economies need it, like alcohol during Prohibition. If we hold the line, can't we do better in the big picture? Because the countries doing what you've just described, they're not doing better. Their economies are deteriorating. Doesn't that side of the ledger also deem some introspection?
It's tempting to think so, but we do live in an interdependent world, especially with regard to currencies, financial flows, investment activity. And the problem is, if the U.S. maintains its virtue and says we're not going that way, first, you're going to make it harder for U.S. exporters because the dollar's already at a very high level relative to other currencies, the currencies of our trade rivals and competitors. Secondly, I think you're going to exacerbate that inverted yield curve issue, and it's just bizarre to have short-term rates higher than long-term rates. And finally, there's the global financial stability aspect of it. If dollar-denominated debt becomes too expensive to service because the dollar rate against these other currencies is too far out of sync, then I think you're into real problems in terms of financial stability.
Well, isn't there another road? You know, this president likes tariffs, and in certain situations, tariffs do get borne, in my opinion, by John Q. Public. But if countries are cheating by manipulating their currency, wouldn't that be a perfect situation to apply a level of tariffs? If the Germans, for example, want the euro weaker to help their auto exports, can't we come up with an equation that should you manipulate your currency, that would be the United States' recourse? Can't we take the high road here?
I think we are taking the moral high road by identifying currency manipulation as an unfair trade practice. It really undermines the principles of free trade. And it's a natural response to say if you're going to effectively apply a tariff against American goods through currency manipulation, making them more expensive in your own country, then our only recourse is to say then we're going to have to do something as well. Unless we call them on it, we can't begin to seek these broader remedies that I think would start to bring about a level international monetary playing field, and that's fundamental to authentically free trade.
But you know what's really fundamental? That people trade markets and invest in markets for their retirement because there's a price discovery and a real value there. What you're describing, if you take it a couple of degrees farther, are markets where why should we get up and trade the Dow Jones Industrial Average? Why should we purchase securities that have yields when all of it is manufactured? Why don't we just create government utilities to dole out certain percentages after you give them your money? Doesn't this make the whole system ridiculous?
I think it does go against the virtue of saving. I think it violates what I would call the American spirit of believing in a better future and greater prosperity. If you just believe in opportunity and if you see financial capital as a seed corn that facilitates entrepreneurial endeavor that brings about a higher standard of living for everyone, it goes against all of that to have negative rates. And I think the managed approach to providing decent returns on investment has proven to be somewhat of a failure. So I think we do have to look more toward money providing that clarity on price signals and believing in free markets as the best way for people to make judgments about risk and return and what they would reasonably invest in. And that will be the beginning of getting back on the road to productive economic activity.